Howdy who, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, what do we got going on with the markets? Well, they pushing the Dow, right? They pushed the Dow up to a new record. They pushed the S&P up to a new record, but they're having trouble pushing the NASDAQ up to a new record. I think the NASDAQ has already set its high, and I think the NASDAQ is going to lead the market down. But first, I do think they're going to take another run at the top, right? They're going to try to push the NASDAQ up, and they may get it up there to where it's a double top. I would not be surprised at all to see the NASDAQ make a double top before it comes in. Now, that's just my take. A lot of people think this is a runaway market. Fed cut by 50 basis points, right? Everybody thinks there's going to be a soft landing. I got news for you. There's about a 0% chance of a soft landing. Now, this is just my take. You see, you cannot print money into oblivion and go into debt as much as we have as a country and not have a crisis on your hand. We're in the middle of a crisis. You see, the last time the Fed reduced the interest rates by 50 basis points, you'd have to go back to the great financial crisis. You'd have to go back to the dot-com boom. These are crisis numbers when the Fed reduces by 50%. They see the crisis in play. Now, what crisis do they see? They see the job market. Jobs are going away. Measure jobs like they did back in 1990. Well, we'd be at about 15% unemployment rate. Granted, the Great Depression, it was 25%. We will get there. Now, why do I think we're going to get there? I think we're going to get there because of what's called zombie companies. Zombie companies are companies that don't bring in enough cash flow to pay the interest on their debt. Forget about paying their debt. Their debt is never going to be paid off. Why? Because they have a bad business model. Their business model does not work, and they can't even bring enough money in to pay the interest on the debt. So the only way they can stay in business is to get new debt, to refinance. And that's why the Fed has to reduce rates so they can get financing. Now, what if 20% of the S&P 500 companies go out? Well, that's going to push the unemployment numbers up to 25%, which would be Great Depression levels. So the Fed has to cut rates, right? They have to cut rates to save the banking system. Now, here's the thing. You see, nobody wants to buy the debt of an insolvent country, right? So we have to sell a lot of bonds. We have to finance our debt by selling bonds. Now, in the next 12 months, we're going to have to sell about $12 trillion worth of bonds because the bonds, they roll over and you need to refinance, resell the bonds, right? So somebody's got to step up and buy $12 trillion, not billion, $12 trillion worth of bonds. Now, is that going to be you? I don't think so. Is it going to be me? Definitely not. But somebody's going to have to do it. Now, of course, the Fed is the buyer of last resort, and they'll end up owning all of the bonds, trying to keep the market from completely collapsing, right? They don't want to crash on their watch. They want to keep things propped up, and that's why they have to buy the bonds and go farther into debt on their balance sheet. Their balance sheet will go from 8 trillion, 9 trillion, 10 trillion, all the way up to 20 trillion when this starts to play out. You see, we're in a kind of a pre-hyperinflation, if you will. The hyperinflation's coming, right? Now, everybody says that dropping 50 basis points doesn't really do anything. And I agree, for most people it doesn't. But what it does is it's going to push prices higher. It's going to push food prices higher, gas prices higher. It's going to hurt poor people. Now, what does it do to rich people? Makes them a little bit more wealthy, right? Because that's going to try to keep the stock market inflated higher, try to keep housing prices up. And you see, here's the thing. Oh, I got some really good news. Really good news. I forgot about this. You see, now, if you're a buyer for the housing market, we got some great news for you if you're looking to buy. You see, the best time to buy is coming up. It's like next week, right? The best time to buy a house, according to Realtor.com, is between September 27th and October 5th. That's your window of opportunity. That's the best time to buy. That's when the most most inventory is on the market, and that's where the fewest buyers are. So you have no competition, right? And you got those low interest rates. Now we're down to just above 6%. Let's call it 6.5% for a mortgage rate. You can get out there and buy. You can be the bag holder. Yes, you. But a lot of people are saying, no, it doesn't do anything. Doesn't do anything. That half basis point doesn't make a difference. Houses are still unaffordable, right? And at some point, you're going to have to make houses affordable again. You can drop interest rates to 0%, and houses are still going to be unaffordable. Now, I know Kamala, she's got the plan. She's going to give everybody money to go buy a house. That's going to make them affordable. No, that's going to raise the cost of the house. Prices will go up if she gives away the free money for the down payment, right? I mean, it's just common sense. It doesn't make houses more affordable. It makes them less affordable. But, Kamala, she didn't, I don't know what school she went to, but she definitely doesn't understand that when you give people free money to go buy a house, it increases the demand and it will increase the nominal price. Now, what happens when she gives that free money away? She doesn't have any money. That money's your money. That money's my money. So what does it do? It causes inflation because we have to print the money for her to give away. You see, that's what happens. So the purchasing power of your dollar continues to go down, right? Now, the Federal Reserve, they're waving that white flag. They're waving the white flag. They think they've conquered inflation. They haven't conquered inflation. Prices are still going up, and they're going to start going up at a faster pace now that we cut by 50 basis points. They're going to reinstate inflation, and that number, 9% by their own measurement. They said we were up at 9. I know it was closer to 20. But that number is going to get blown out of the water. We're going to pass that number. We're going to hit 12, 15%. The real number is going to be at least double that. You see, they lie to you, but that's the thing that they do. But here's the thing. You can protect yourself. I keep talking about this. People say I'm a broken record. And I say I'm a broken record because this is important. You can protect yourself. You can get out of their system being the Federal Reserve. You can take away the power from the Federal Reserve, and you can take your power back, give the power back to the people. How do you do that? You have the quiet revolution. Take the currency out of the bank, start to buy real money, gold and silver, right? You take the fake currency and you buy the real stuff. That takes away the power of the Federal Reserve. When the Federal Reserve has no power anymore, things will get back to normal. But until then, they're going to keep printing money. Prices are going to keep going up. And here's the thing, the silver market, it's getting hard to find silver. Nobody's selling it, right? Because they're smart. Nobody's selling it. And all the silver that they're selling, it's the premiums. The premiums are going up again now. It used to be Silver Eagle's $3 premium. Right now it's like $5 premium. Why? Because it's getting harder to find because of Silver Eagle. That's what's known as the coin of the realm, the coin of your country. Live in the United States, the Silver Eagle is the coin of the realm. The junk silver, and it's nothing junk about it. You can call it constitutional silver. You can call it the coin of the realm. The dimes, the quarters, the half dollars, the dollars, all pre-1965. 1965, they took the money out of the money. But those are getting hard to find. Most coin shops don't have them anymore. They're running out of them because people are scooping them up. People are starting to see the writing on the wall. The writing on the wall is that currency, the dollar bills, are going to go away. They're going to go to zero because of the purchasing power. Purchasing power is going away. You see, when they hand out the money, they don't even bother to print it anymore. They don't even need to use paper to print it on. It's just type in the digits into the computer system, and then that's the printing of money now. It's all digital, right? And I feel sorry for the young people. Young people, they accept the digital stuff. I do not. I want the real stuff. I want the gold. I want the silver. But they're very happy with the digital. They don't even want cash anymore. They want to, use their phone to pay for everything. They got their digits on the screen. They're going to be so sad when those digits disappear. And it could happen overnight, right? I mean, those digits can go away. And then if you're not holding anything real, I mean, young people, they don't want to buy a house. Well, they can't afford to buy a house, so they have nothing real in real estate, right? They rent there, but they have nothing real in real money, right? It's all digits on the screen, and they're happy with that. But once those digits disappear and then we get the reset, young people are going to learn a very important lesson. If you don't hold it, you don't own it. I don't know who coined that phrase. Maybe it was Lynette Zhang. Let's go with her. Okay, I hear it from her all the time. I watch her channel, very informative, right? Anyways, if you don't hold it, you don't own it, right? The digits on the screen, those aren't yours. You don't hold it, you don't own it, right? Physical silver, physical gold, you hold it, you own it. There's no counterparty risk, right? Now, a lot of people talk to me. I have one friend, he's very big into the miners. Now, look, I own a lot of mining stocks. I believe it also, right? I mean, if gold keeps going up, eventually the miners will go. Miners have lagged behind the gold move a lot, right? So they're the cheapest thing as far as stocks go. I agree with that. But let's say the miners, let's say you put $1 million in and you make $5 or $10 million in profit, but all of a sudden their system goes down, right? And so that your broker, let's say it's Charles Schwab. Charles Schwab's out of business, right? How do you get the money out? You're not holding on to it. Oh, but Mike, I got the shares of stock. Do you have the physical shares in your hand? I don't think you do. You have digits on a screen. When they go down, and it'll happen, the system will break, system will go down, your brokerage houses, Charles Schwab, E-Trade. And I use these people. These are people that I use, right? Ameritrade. These are all good people. But when the system goes down, you're not holding it. They're not going to be able to give it to you because they don't have it. You see, everything's going to go down. So whatever you're holding as far as real, as far as physical, that's what you're going to be left with. Yeah, if you got some real estate and it's paid off, that's very valuable, right? I mean, yeah, you're going to have to pay your property taxes, but that's why you have a little extra of the physical gold and silver, because they're going to raise those taxes to try to recoup money, to try to stay in power. They're going to try to get money from us any way they can. They want to raise taxes. They say they're just going to do that on the rich people. Really? Does inflation just hurt the rich people? No, inflation hurts the poor people, right? Remember Biden, when he came out, he said he's not going to tax anybody that makes less than $400,000. He taxed everybody. How'd he do it? He did it with inflation, 25% just since he's been in office. 25%? Yeah, that's crazy, right? But that's just not money you're earning. Inflation's the everything tax. Taxes the dollars you make, right? Taxes the dollars you have saved, right? Taxes the dollars you spend. It's the everything tax. 25%. He wiped us out. Now, can we afford another 25%? Let's put Kamala in. Let's see if we can. Let's see if we can afford it. I bet she does 50%. 50% in the inflation will happen during her watch. I believe that. I believe that. Can you afford to lose half of your wealth? Oh, maybe you can. Maybe you're a rich person, right? Maybe you got a lot of assets. Maybe you own a lot of real estate. Maybe that'll make it go up in nominal terms. But if you want the real money, I'd start with gold and silver, right? Because I know that's going up. You put her in, you're going to have $10,000 gold. Now, the other guy, you'll probably get $10,000 gold also because he's going to print money. They all print money. They don't care about the debt. They don't care about you. They don't care about me. They just care about staying in power. That's all they want to do. They'll give you whatever you want. You want a new car, a new truck, new house, whatever you want. Free education, free health care. We'll give it to you. That's fine. Oh, they give it to you. They don't have any money. They print it, right? And who pays for that? We do in the form of inflation. They can say they're not taxing you. I don't even know why we pay taxes. Why not just print the money? You know, why do we have to pay taxes? They could just print it, right? Yeah, they could. So anyways, I got a little carried away there. But the banks are in a lot of trouble, right? The banking system, look, the banks are about ready to go down. I get very nervous. Now, I have money in banks. I do. I would be the first to admit that. Probably have too much in there. You know, you got to have your dry powder somewhere, and you can have it sitting in a CD in a bank, or you can go direct to the Treasury and get the bonds direct from the Treasury. That's probably a little better idea. It's not as convenient, to be perfectly honest, but the banks are going to go down. Now, if you're under $250,000, you're going to eventually get your money back. The FDIC, they don't have your money. They'll print your money, so they'll get it back 3-6 months. Can you live without your money for 3 or 6 months, they're not going to pay you interest on it. They're just going to keep it for that long. That's how long it's going to take them to figure out the mess when the system starts to go down. Look, they bailed out Silicon Valley Bank. What did it do? It took away all the reserves the FDIC had, took away all the bailout money. You get another big one going down. I'm worried about Bank of America. I really am. I think Bank of America is going to be the one they sacrifice. I think that one's going to go down. That's just my take. Yeah, maybe your bank would make me a little bit nervous being in there. They're a big bank, and when they start to fail, they're all intertwined. Maybe the whole system comes down at that point. We'll see how this plays out, but there is a reset coming, and the great reset, but you can be on the winning side of this wealth transfer. The wealth is going to be transferred. Who's it going to be transferred to? It's going to be transferred to people holding real things, holding the gold, holding the silver. Who's it going to be transferred from? It's going to be transferred from the people that have the digits on the screen, right? Those digits are going to go away. Maybe they increase the digits to billions and trillions and quadrillions. Maybe that's what happened, but it's not real. You got to be holding the real stuff. The real stuff is going to be real wealth. Wealth is not going to be measured in dollars. It's going to be measured in terms of ounces and pounds, ounces of gold, pounds of silver. How much do you have? That's just my take. If you like this stuff, give me a thumbs up. Get out there, everybody. Have a great day. I want to talk to you again later in the week. Bye-bye now.